Welcome back to Boni's Life. And what a week it's been in the crypto markets. I'm your host, Boni, and if you've been following the markets, you know we're witnessing some absolutely incredible movements that are reshaping the entire landscape of digital assets. Today, we're diving deep into Bitcoin's explosive surge past the $116,000 mark, analyzing what this means for the broader crypto ecosystem and exploring the potential implications of the Federal Reserve's upcoming rate decision. Let me start by saying that what we're seeing right now is nothing short of historic. Bitcoin has not only broken through multiple resistance levels, but has done so with the kind of conviction and volume that suggests this isn't just another speculative bubble. We're looking at genuine institutional adoption, regulatory clarity, and macroeconomic conditions that are creating a perfect storm for digital asset appreciation. The numbers speak for themselves. Bitcoin is currently trading at levels that many analysts thought we wouldn't see until 2026 or 2027. We've witnessed a 23% surge in just the past week alone, with trading volumes that are absolutely staggering. But here's what's really interesting. This isn't just a Bitcoin story. The entire crypto market is experiencing what can only be described as a renaissance, with altcoins posting gains that are making even the most seasoned traders do double takes. Let's talk about the technical picture first, because the charts are telling us a story that's both compelling and, frankly, a little bit scary if you're not positioned correctly. Bitcoin's breakout above $116,000 represents a decisive move through what has been a major resistance zone for months. This level has been tested multiple times, and each time it held firm, creating what technical analysts call a zone of significance. When these levels finally break, they often lead to explosive moves, and that's exactly what we're seeing. The volume profile during this breakout is particularly noteworthy. We're seeing massive institutional buying with order sizes that suggest pension funds, hedge funds, and possibly even sovereign wealth funds are accumulating positions. The average trade size has increased by over 400% compared to retail-dominated periods, which tells us that the smart money is not just participating but leading this rally. From a technical analysis perspective, the next major resistance level sits around $123,000, which coincides with the 1.618 Fibonacci extension from the previous major correction. If we can break through that level with similar conviction, we could be looking at a move toward $135,000 or even $150,000 in the near term. But let's not get ahead of ourselves. Markets don't move in straight lines, and even in the strongest bull markets, we see corrections that can shake out weak hands. The support levels are equally important to understand. The immediate support sits at $113,500, which was our previous resistance that should now act as support. Below that, we have the $108,000 level, which represents the breakout point from the previous consolidation range. These levels are crucial for anyone looking to add to their positions or manage risk effectively. Now let's talk about what's driving this incredible momentum, because understanding the fundamentals is just as important as reading the charts. The primary catalyst appears to be the anticipation of the Federal Reserve's rate decision this Wednesday. The market is pricing in a 75% probability of a 25 basis point cut, which would bring the federal funds rate down to a range that's historically been very favorable for risk assets like Bitcoin. Lower interest rates make yield-bearing assets less attractive, which drives capital toward alternative stores of value. Bitcoin, with its fixed supply and growing institutional acceptance, is increasingly being viewed as digital gold. But unlike gold, Bitcoin offers the advantages of being easily transferable, perfectly divisible, and immune to the physical constraints that limit traditional precious metals. The institutional adoption story continues to accelerate at a pace that's frankly breathtaking. We're seeing companies that were once skeptical of crypto now announcing Bitcoin treasury strategies. The latest data shows that institutional holdings of Bitcoin have increased by 34% quarter over quarter, with no signs of slowing down. This isn't speculative money. This is long-term capital allocation by some of the most sophisticated investors in the world. What's particularly interesting is the stablecoin market, which has grown to over $200 billion in total market capitalization. This represents dry powder that's sitting on the sidelines, ready to be deployed into crypto assets. When we see stablecoin inflows of this magnitude, it's often a precursor to significant price movements, and that's exactly what we're witnessing now. The altcoin market is where things get really exciting from a trading perspective. Ethereum has been showing incredible strength, breaking through the $4,500 resistance level that had been capping its upside for weeks. The upcoming network upgrades and the continued growth of the decentralized finance ecosystem are providing fundamental support for higher prices. We're seeing daily active addresses on the Ethereum network reaching new all-time highs, which suggests that the utility and adoption of the platform continue to grow. Solana has been another standout performer, with its focus on high-speed, low-cost transactions resonating with both developers and users. The ecosystem continues to expand, with new projects launching daily and total value locked in Solana-based protocols reaching record levels. From a technical perspective, Solana looks poised for a breakout above $300, which could open the door to much higher levels. The expert commentary on these developments has been fascinating to follow. Michael Saylor, the CEO of MicroStrategy and arguably the most vocal Bitcoin advocate in corporate America, has been doubling down on his bullish thesis. His company now holds over 1 million Bitcoin, making it one of the largest corporate holders in the world. Saylor's recent comments about Bitcoin being the solution to our economic dilemmas reflect a deep conviction that digital assets represent the future of money itself. On the other side, we have more cautious voices like the analysts at JP Morgan, who are warning that the market might be getting ahead of itself. Their trading desk is cautioning clients that we might be approaching a near-term peak for risk assets. They are also skeptical about the explosive growth projections for stablecoins, calling trillion-dollar predictions far too optimistic. It's a classic Wall Street perspective, and it provides a healthy counterbalance to the more exuberant voices in the space. Kathy Wood from ARK Invest continues to be one of the most respected voices in the disruptive innovation space. She's sticking to her guns, predicting that Bitcoin will outperform gold and reiterating her long-term price target of $1.5 million per Bitcoin. Her reasoning is based on the idea that Bitcoin will eventually capture a significant portion of the global store of value market, which includes not just gold, but also real estate, art, and other traditional stores of value. The regulatory environment is also evolving in ways that are generally favorable for the crypto industry. The SEC's recent unveiling of Project Crypto, a comprehensive regulatory framework for digital assets, signals that regulators are moving from hostility to cautious acceptance. This regulatory clarity has been one of the biggest obstacles to institutional adoption, so progress on this front is incredibly significant. The Federal Reserve itself is hosting a major conference on the potential use of crypto and AI in finance, which shows that central bankers are taking digital assets seriously. This isn't just academic curiosity. This is the central bank of the world's largest economy trying to understand how digital assets fit into the future of the financial system. From a global perspective, we're seeing central banks around the world exploring their own digital currencies, while some smaller economies have already adopted Bitcoin as legal tender. These real-world experiments are providing valuable data for larger economies that are considering their own digital asset strategies. So how should you be positioning yourself for the week ahead? The key level to watch is that $117,200 resistance for Bitcoin. A clean break above that level on strong volume could signal a move toward $120,000 to $123,000. If we see a pullback, the $113,500 support level should provide a good entry point for those looking to add to their positions. The Fed's decision on Wednesday is the wild card that could trump all technical analysis. We could see serious volatility regardless of what they decide. If they cut rates as expected, we might see an initial pop followed by profit-taking. If they surprise the market by holding rates steady, we could see a sharp sell-off as position traders adjust. For the altcoin market, Ethereum looks particularly strong if it can hold above $4,500. The upcoming upgrades and continued DeFi growth provide fundamental support. Solana is another one to watch, especially given its strong performance and ecosystem development. Risk management is absolutely crucial in this environment. The crypto market can be moved by relatively small amounts of capital, creating opportunities for massive gains, but also potential for significant losses. never invest more than you're willing to lose, and always have an exit strategy. One strategy that's particularly effective in this market is dollar cost averaging. Instead of trying to time the market perfectly, consider making regular purchases regardless of price. This smooths out volatility and ensures you're not trying to catch a falling knife or chase a runaway train. The tax implications of your trading strategy are also important to consider. In many jurisdictions, crypto trading is subject to capital gains taxes, and the rules can be complex. Make sure you understand the implications and keep detailed records of all transactions. Looking at the broader picture, we're witnessing a fundamental shift in how the world thinks about money and value storage. The institutional money flowing in, the regulatory clarity emerging, and the macroeconomic conditions all point to continued growth in the digital asset space. But with great opportunity comes great risk, and it's important to approach this market with both optimism and caution. The week ahead is going to be crucial. The Fed's decision could be the catalyst that sends us to new all-time highs, or it could trigger a healthy correction that sets us up for the next leg higher. Either way, it's going to be exciting, and I'll be here to help you make sense of it all. Remember to do your own research, stay informed, and never invest more than you're willing to lose. The crypto market is not for the faint of heart, but for those who approach it with the right mindset and strategies. It can be incredibly rewarding. Most importantly, don't forget to enjoy the ride. We're witnessing history in the making, and that's something to be excited about. Before I sign off, I want to remind you to like this video if you found it helpful, subscribe to the channel if you haven't already, and hit that notification bell so you don't miss a single episode. Your support means the world to me, and it's what allows me to keep bringing you this content week after week. If you have questions or topics you'd like me to cover in future episodes, drop them in the comments below. I'm Boni, and this is Boni's Life. Until next time, stay curious, stay informed, and most importantly, stay profitable. The future of money is being written right now, and we're all part of that story. The cryptocurrency landscape is evolving at a pace that's unprecedented in financial history. What we're witnessing isn't just a speculative frenzy. It's a fundamental restructuring of how value is stored, transferred, and perceived globally. The traditional financial system, built on centuries-old infrastructure and controlled by centralized institutions, is being challenged by a decentralized alternative that operates 24/7, knows no borders, and is accessible to anyone with an internet connection. This transformation is being driven by several converging factors that are creating what economists call a perfect storm for digital asset adoption. First, we have the macroeconomic environment characterized by unprecedented monetary expansion, historically low interest rates, and growing concerns about currency debasement. Central banks around the world have printed trillions of dollars in response to various economic crises, leading to inflation concerns and a search for alternative stores of value. Second, we're seeing a generational shift in investment preferences. Millennials and Generation Z, who will inherit the largest wealth transfer in history over the next 2 decades, are digital natives who view cryptocurrency not as a speculative asset, but as a natural evolution of money. They are comfortable with digital interfaces, skeptical of traditional institutions, and attracted to the transparency and immutability that blockchain technology provides. Third, the technological infrastructure supporting cryptocurrencies has matured dramatically. The early days of Bitcoin were characterized by technical challenges, security concerns, and user experience issues that made adoption difficult for mainstream users. Today, we have sophisticated exchanges, institutional-grade custody solutions, and user-friendly applications that make buying, storing, and using cryptocurrencies as simple as using any other financial service. The institutional adoption story is particularly compelling because it represents a validation of cryptocurrency's long-term viability. When companies like Tesla, MicroStrategy, and Square began adding Bitcoin to their corporate treasuries, it sent a signal to the broader business community that digital assets were no longer fringe investments, but legitimate treasury management tools. This trend has accelerated, with companies across various industries now exploring how cryptocurrencies can enhance their operations, from cross-border payments to supply chain management. The regulatory landscape, while still evolving, is becoming increasingly favorable for cryptocurrency adoption. Governments around the world are recognizing that digital assets are here to stay and are working to create frameworks that protect consumers while fostering innovation. The United States, despite some regulatory uncertainty, remains a leader in cryptocurrency innovation, with major financial institutions receiving approval to offer crypto services to their clients. From a technical analysis perspective, the current market structure suggests we're in the early stages of what could be a multi-year bull cycle. The patterns we're seeing in Bitcoin and other major cryptocurrencies are reminiscent of previous bull markets, but with some important differences. The current cycle is characterized by stronger institutional participation, better regulatory clarity, and more mature market infrastructure, all of which suggest that the gains could be more sustainable than in previous cycles. The options market is also providing interesting insights into market sentiment and future price expectations. The put-call ratio for Bitcoin options has been declining steadily, indicating that traders are increasingly bullish and willing to bet on higher prices. The implied volatility in these options is also relatively low compared to historical levels, suggesting that the market expects continued upward movement without the extreme volatility that characterized earlier bull markets. The derivatives market more broadly is showing signs of healthy growth and maturation. Bitcoin futures trading volumes have reached record levels, with both retail and institutional participants actively using these instruments for hedging and speculation. The launch of Bitcoin ETFs has provided another avenue for traditional investors to gain exposure to cryptocurrency without the technical challenges of direct ownership. The decentralized finance sector deserves special attention because it represents one of the most innovative and potentially disruptive applications of blockchain technology. DeFi protocols are essentially recreating traditional financial services like lending, borrowing, and trading, but without the need for traditional intermediaries like banks or brokers. The total value locked in DeFi protocols has grown exponentially, reaching hundreds of billions of dollars and showing no signs of slowing down. This growth in DeFi is particularly significant because it demonstrates the practical utility of cryptocurrencies beyond simple speculation. Users can earn yield on their crypto holdings, access loans without traditional credit checks, and participate in complex financial strategies that were previously only available to institutional investors. The composability of DeFi protocols, where different services can be combined to create new financial products, is leading to innovations that are pushing the boundaries of what's possible in finance. The non-fungible token market, while experiencing some volatility, continues to evolve and find new use cases beyond digital art and collectibles. NFTs are being used for everything from event tickets to real estate deeds, demonstrating the versatility of blockchain technology for representing ownership of unique digital and physical assets. The integration of NFTs with gaming and virtual worlds is creating new economic models that could reshape entire industries. Environmental concerns about cryptocurrency mining, particularly Bitcoin, have led to significant innovations in sustainable mining practices. The industry is increasingly powered by renewable energy sources, with many mining operations specifically seeking out stranded or excess renewable energy. This trend towards sustainability is not just good for the environment, it's also economically advantageous for miners, as renewable energy is often cheaper than traditional sources. The global nature of cryptocurrency adoption is creating interesting dynamics in international finance. Countries with unstable currencies or restrictive capital controls are seeing increased cryptocurrency adoption as citizens seek to protect their wealth and access global markets. This trend is particularly pronounced in Latin America, Africa, and parts of Asia, where traditional banking infrastructure may be limited but mobile phone penetration is high. Central bank digital currencies represent another important development in the digital asset space. While CBDCs are fundamentally different from decentralized cryptocurrencies like Bitcoin, their development and deployment are helping to normalize the concept of digital money and are likely to accelerate overall adoption of digital payment systems. The intersection of artificial intelligence and blockchain technology is opening up new possibilities for automated financial services, predictive analytics, and risk management. Smart contracts are becoming more sophisticated, capable of executing complex financial agreements automatically based on real-world data feeds. This automation is reducing costs, increasing efficiency, and enabling new types of financial products that weren't previously possible. Looking ahead, the potential for cryptocurrency adoption in emerging markets is enormous. Countries with large unbanked populations, volatile local currencies, or limited access to traditional financial services represent massive opportunities for cryptocurrency adoption. Mobile-first cryptocurrency solutions are being developed specifically for these markets, potentially leapfrogging traditional banking infrastructure in the same way that mobile phones leapfrogged landline networks. The education and awareness around cryptocurrencies continue to improve, with major universities offering courses on blockchain technology and digital assets. This educational foundation is creating a generation of professionals who understand the technology and its implications, which will be crucial for continued adoption and innovation in the space. As we look toward the future, it's clear that we're still in the early stages of a technological and financial revolution. The current market movements, while exciting, are just the beginning of what could be a fundamental transformation of the global financial system. The key for investors and participants in this space is to maintain a long-term perspective, continue learning about the technology and its applications, and approach the market with appropriate risk management strategies. The volatility that characterizes cryptocurrency markets is both a challenge and an opportunity. While it can create significant short-term stress for investors, it also provides opportunities for those who can maintain discipline and stick to their investment strategies. The most successful cryptocurrency investors are those who understand the technology, believe in its long-term potential, and have the patience to ride out the inevitable ups and downs of this emerging market. The psychological aspects of cryptocurrency investing cannot be understated. The market's 24/7 nature, combined with its volatility, can create emotional challenges that traditional investors may not be prepared for. Fear of missing out, panic selling during corrections, and overconfidence during bull runs are all common psychological traps that can derail even the most well-intentioned investment strategies. Successful cryptocurrency investing requires developing emotional discipline and sticking to predetermined strategies regardless of short-term market movements. This means setting clear entry and exit points, diversifying across different assets and time horizons, and never investing more than you can afford to lose. The most successful investors in this space are those who can maintain a long-term perspective while remaining flexible enough to adapt to changing market conditions. The community aspect of cryptocurrency is also worth noting. Unlike traditional financial markets, the cryptocurrency space has developed vibrant online communities where information, analysis, and support are freely shared. These communities can be valuable sources of education and insight, but they can also amplify both positive and negative sentiment in ways that can influence market movements. Thank you for joining me on this journey through the cryptocurrency markets. The future is being written right now, and we all have a role to play in shaping what comes next. The cryptocurrency revolution is not just about technology or finance. It's about empowerment, financial inclusion, and the democratization of wealth creation. For the first time in history, individuals anywhere in the world can participate in a global financial system without permission from traditional gatekeepers. As we move forward, the importance of education and responsible participation cannot be overstated. The cryptocurrency space rewards those who take the time to understand the underlying technology, market dynamics, and risk factors. Success requires patience, discipline, and continuous learning. The future belongs to those who embrace innovation while managing risk responsibly in this transformative digital economy. Stay profitable,